This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on February 17th, 2017. Our time is 8:40 Mountain. Radio show runs every Sunday afternoon at 3 on 630 CHED in Edmonton. Next Sunday, we're going to be on from 12:30 to 1:30. Prior to the face-off show, the Oilers are playing the Nashville Predators at 3 o'clock. So next Sunday, February 26th, we're on at 12:30 to 1:30 prior to the Oilers game. And I should mention, if you ever miss a radio show, obviously it's Family Day in Canada this long weekend and President's Day in the United States. For some reason, if you miss us, don't forget, the shows are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com, and people love their podcasts. This show is podcasted on iTunes. Type in The World Financial Report on Radio. You will find us there. Connect with Harold Siegel at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. Our featured diamond of the week. This diamond could become a legend in the future. It's really up to the person that decides to cut and polish it. This diamond is a .25 carat fancy intense green with potential to be nearly flawless. It is a rough. You can see a picture of it at rarecoloreddiamonds.com, featured diamond of the week, and we will talk in the second half of the show about the possibilities of this diamond. I know that there's talk that this could become a museum piece. It's a showcase somewhere down the line that people will look at around the world. This is a special diamond. One of the things that happened this week, Federal Reserve Chair Janet Yellen. Sounds like she's on a mission to raise interest rates in the United States this year, no matter what President Donald Trump does on tax cuts and spending. In a clarifying point during Senate questioning on Tuesday, Yellen said the central bank doesn't need to wait for fiscal stimulus in order to hike rates. As a result, you saw the U.S. dollar take off. One of the other things that we do know here in Canada, as we've stated before, they're talking about a cut or leaving our interest rates static at 0.5 point. If they're raising rates in the United States 3 times, 4 times this year, and then in 2018, you can pretty much guarantee, as Harold's thesis goes, the U.S. dollar will strengthen, the Canadian dollar will go down. And Harold, that's one of the things that we're really recommending. Get some money into U.S. dollars and investments that pay you in U.S. dollars.
You better believe it. It's never been more important than it is right now, because we are going to see a very, very strong U.S. dollar, and we're going to see extremely weak foreign currencies. So let me explain this to you and try to make it as simple as possible, because currencies can be difficult to understand. So I'm going to try to make it as easy as possible. But the currency markets affect our everyday life. All you have to do is travel to the United States and know that it's going to cost you $1,310, pretty well $1,320 to get $1,000 American. So that's the best example. But the U.S. dollar index it trades on the futures market, like all currencies do. And basically, it's an index, or it's a measure of the value of the United States dollar relative to a basket of foreign currencies. So it's just not that the U.S. dollar trades on its own. It trades against what other currencies are doing. And what makes up the weight of the currencies that we trade against is the euro, which is more than half of it, 57.6%. So when you see the euro, which has been as high as 170, is now trading at 106, you can understand that it's fallen substantially against a very strong U.S. dollar. So this basket of currencies that the U.S. dollar trades against is 57.6% the euro. It's 13.6% the Japanese yen. It's 11.9% the pound sterling. It's 9.1% the Canadian dollar. It's 4.2% the Swedish krona, and it's 3.6% the Swiss franc. So when the U.S. dollar gains strength, it's gaining strength against those currencies in particular. Now, the U.S. dollar started in March of 1973, soon after the dismantling of the Bretton Woods system. At its start, the value of the U.S. dollar was at par. It's at $1. Since that time, it's traded as high as 164 in February of 1985, and as low as 70.69 on March of, it was actually March 16, 2008, but then again it hit that price again in 2011 when gold made its highest move and it actually hit 1920. So the fact is that the U.S. dollar will continue to gain strength as other currencies fall. And the fact is that it's only the United States that can raise interest rates at this point, because their economy is better than anybody else's in the world at this particular time. So when you hear that the Japanese yen is at pretty well all-time lows, and they've been in a recession for the last 15 years, basically, maybe even more, there's no chance that Japan is going to raise interest rates. Either is Britain, either is Canada. We know that Canada is going to keep their interest rates at 0.5%, but all of these countries are basically trading at the same. Their interest rates are so low and their dollars are so weak, and that is going to continue. So if these countries continue to lower their interest rates, which they are going to do to try to spur on their economy, then it's only going to make the U.S. dollar that much stronger. It's absolutely that simple. So the fact is that soon, and we've already seen this in other parts of the world, that countries are going to start to have negative interest rates. Right now, interest rates in Canada and other parts of the world are at 0.5%. Soon they're going to be at even, at nothing, and then it's going to start to go negative, which is going to mean that their currencies are going to fall even further, and the U.S. dollar is going to get stronger and stronger. Now, do I absolutely see that the U.S. dollar is going to go back to the all-time high of 164? No, I don't see that. That would be an alarming price for the U.S. dollar, and all other currencies would be basically almost worthless at that point. What I do see is the U.S. dollar coming back up to the 115 to 120 level, which is substantial. So the fact is that right now the U.S. dollar is trading at 101. It's been as low as 70 cents, but right now it's trading at 101. I believe that it's going to go to 115 to 120 over the next few years, and I believe that the Canadian dollar, and please don't take this as an insult in any way, because I'm Canadian and love everything Canadian, all sports teams, everything about Canadian, and I'm proud to be Canadian, but I have no control over what the Canadian economy does and what the Parliament is doing as far as the Canadian dollar. And right now, they are decimating the Canadian dollar. It's going to drop, in my opinion, all the way down to around 62 cents. Right now, it's trading at about 71 cents. So I see the market in Canada falling tremendously. The newsletter this week, if you don't already receive it, you must receive it now, because there's some articles in there that are very, very alarming, and a lot of it has to do with what's happening in Canada with the real estate market. And the fact is that the speculation that's been going on in the real estate market has been substantial, and it's going to really cause some severe problems. So, again, we want to watch that. There's also a direct correlation between gold and the U.S. dollar, okay? So let's just talk about that for a couple of minutes, because it's extremely important. Back in 1975, gold was trading in and around the $100, $150 level. Okay? It's also important that we understand that in 1985, the price of the U.S. dollar was very strong. Obviously, we talked about 164, and interest rates at that point were about 22 to 25%. Right now, again, interest rates are at about 1%. But don't forget, back then, to try to take out a mortgage, you were paying 22 to 25%. So gold went from 1975, when the U.S. dollar was at its strongest level, gold was basically trading at $150. Gold was trading at 150 back in 75. By 1980, gold was up to 800 because the U.S. dollar was strengthening tremendously, and in 1985 is when the U.S. dollar hit the highest point it's ever hit in history. And gold was at its highest level at that point. Now, gold is traded down in 1982 as low as $350. We actually started recommending gold when it was right at around the $300 level, in and around that price, because the U.S. dollar was coming off its strongest point. We felt the U.S. dollar was going to fall substantially, and that's exactly what it did. And then by 1980s, gold was up to $850. Let's fast forward to more recent times. In 2011, the U.S. dollar was at its lowest level of 70 cents, and gold was at its highest point of $1,920. And if you don't know how that happened and you want to see the charts, definitely call me, and I'll email and send the charts to you. But what I'm trying to prove here is that there's a direct correlation between gold and the U.S. dollar, and that's 100%. There's no doubt about it. In 1980, the U.S. dollar was extremely strong, and gold was weak, was falling at that point. When we're back in 2011, you've got the gold price at the highest level it's ever been at 1920, but you had the U.S. dollar at its lowest level, and that was all the way down to 70 cents. Then what happened is that the U.S. dollar started to fall, or started to gain strength, started to gain tremendous strength, and it went all the way from 70 cents all the way up to the 101 level that it's at right now, and that's why gold has actually come back down. So you saw that when the U.S. dollar was at 70 cents and gold was at 1920, if you look at the charts, you're going to see a pretty well straight down plummet all the way down to $1,100 in gold at that particular point. And that's when the U.S. dollar started to gain strength again, and that's why we're sitting where we are at this particular point. So as we're moving forward, we feel that the U.S. dollar is going to gain tremendous strength again. Right now it's at 101. If it goes to 115, we're actually going to say that that could have pushed gold all the way back down to maybe the $800 level or even lower. But there's a reason why gold is not dropping so much at this particular point, and it's the fear of everything else that's happening in the world. So where the U.S. dollar has the biggest effect on gold, in actual fact, at this point, you're starting to see that the market is getting a little bit concerned with the Trump presidency and the fighting that's going on with Mexico and Australia and everything else that's happening with Trump. Now, the markets tend to like Trump at this particular point, but they're cautious, and that's what we're saying at this point, is that we could see some fireworks in the market. I'm not looking that gold is going to take off and run, but I'm going to say that gold is not going to fall as much as we felt it could when the U.S. dollar gets to 115 to 120. I think the gold is going to hold in there fairly strong because of other world situations. And what we're concerned about at this particular point is what's happening in North Korea, and that's one of the reasons why gold is trading right now at about 1220 when it should be trading right now at about 1,050. So again, we're going to keep a very close eye on gold. I'm still very, very bullish on gold and going to buy gold again very, very soon because again, there are situations we need to hedge against what's happening in the world right now. Where the U.S. is the strongest economy, it's still not a great economy. We know that there's a lot of problems in the United States. There's huge debt, and there's a lot of problems, and the middle class is just not doing very well. However, the Dow is doing extremely well. So what we want to do at this point here is that on the next pullback in gold, there's a very, very good chance that we're going to start to add gold back to our portfolio, because even though we do feel that the U.S. dollar is going to strengthen, we do feel that there's other situations in the world that we need to own gold at this point or very soon, and it's going to be a great hedge against other situations that we're concerned about. So at this particular point, gold has been trading in a range. We're trading right now at around 1240. The U.S. dollar is trading at 101. And we feel, again, that we're going to see about a 15-cent increase over the next couple of years in the U.S. dollar, which leads me to this recommendation. The fact is that if the U.S. dollar is going to continue to strengthen, which it has to, and the Canadian dollar is going to fall, which it has to, why in the world would we not take advantage of that? My clients that have converted their money to U.S. dollars are making a fortune right now. We're making 25% or more on our private investments, and all those investments are in U.S. dollars. And very soon what we're going to find is as the U.S. dollar gets to the 115 to 120 level, we're going to make a fortune in the currency because the U.S. dollar could be worth double what the Canadian dollar is worth. And we want to take advantage of that. If you're in the retirement savings plans, 99% of the people in those lose their money. So if you're sitting in a retirement savings plan and you're saying, how in the world am I ever going to retire when my RRSPs are doing so poorly and interest rates are at zero, how in the world am I ever going to retire? Well, if you go the route that you're going at this point and not make any progressive moves at this time, you're going to be like most people and find that you're never going to be able to retire because interest rates are just way too low and there's big problems in Canada. And you're going to find that the real estate market is going to be severely hurt because of the severe speculation that's happening in two cities, in Toronto and in Vancouver. We're already starting to see signs that that's starting to crumble. Other parts of the country are not doing that well in real estate. It's just Vancouver and Toronto that we're doing well, but there's speculation is going to stop. That's going to be a problem for the banks. You're going to see some major situations happening, and you can't just sit there and let it happen to you. The best analogy I can give you is what happened in Britain a few months back with Brexit. People that did nothing lost 25% of their net worth in 1 hour. My clients that hedged the British pound at that point there made 500% return on their money in 1 hour. So the fact is that we need to do something and be progressive, and we have private investments. We're in the alternative asset business. We don't trade stocks or bonds or mutual funds or anything like that. Nothing paper. Everything that we do is physical, and everything we do is outside of that system. And our clients are doing tremendously well. They're all in U.S. dollars, and we're making over 25% return on our investments. I know it sounds too good to be true. Everybody says it, but I can assure you it's been going on for 5 years, and many of our clients are retiring off of getting 25% return on their money in U.S. dollars. So, again, Randy, as confusing as things are, the most important thing to pay attention to right now is the currency markets, and that's what we do. I've been trading currencies for 35 years that have made fortunes in that market for my company, for myself, and for my clients. This is one of the best opportunities that I have ever seen to make money in the currency markets, and all you need to do is give me a call and I'll explain exactly how that can help you and your family. So, again, Randy, as confusing as things are, I think there's tremendous opportunity in certain markets at this point. And, again, we've been trading this for the last 5 years with our clients in Canada, and we've just been killing the market. We've been doing tremendously well, and now we're convinced that the biggest moves are about to happen, and we have to make certain that we take advantage of those.
What we're finding, people listening to the radio program for many, many years are picking up the phone for the very first time and calling Harold Siegel. Well, do not wait. If you're listening for the very first time or you've listened to us for just a little bit, don't wait 10 years, 15 years. Pick up the phone, speak with Harold Siegel right now. The call is free. Mark down this number, 1-800-432-1022. 1-800-432-1022. The website, rarecoloreddiamonds.com. So the question is, what do we do today so we can retire tomorrow? How do we invest? And that's why we do this radio show. You can call Harold. He speaks with our radio listeners every week. The call is free. Anything discussed is confidential. rarecoloreddiamonds.com, 1-800-432-1022. Harold has programs that you can get into today, and you can start making money immediately. Our featured diamond of the week, and we'll talk about this in the second half of the show, is a 2.5 carat fancy intense green with potential to be nearly flawless. This is a rough You can see this rough diamond at rarecoloreddiamonds.com, featured diamond of the week. It is absolutely gorgeous. The potential of this diamond is limitless. It's going to be one of the all-time great diamonds when it's polished and cut, and you have an opportunity to speak with Harold about that diamond at 1-800-432-1022. One of the things that we touched on off the top of the show, Janet Yellen sees more rate hikes ahead if the U.S. economy stays on course. And that was reiterated by one of her cohorts. Fed's Rosengren sees at least 3 rate hikes per year. The Federal Reserve may need to raise interest rates a bit more aggressively than the 3-time per year pace forecasted by the Fed policymakers if the United States economy picks up steam as expected. Now, Boston Fed President Aaron Rosengren, a longtime Dove who last year switched tact and began pushing for tighter monetary policy, said he expects the U.S. Central Bank to raise rates at least as quickly as the median Fed forecast from December. That forecast, based on 17 Fed policymakers, predicts 3 hikes in each of the next 3 years as inflation edges up to a target. They're talking about 2%, and gross domestic product remains around 2%. But what they're talking about, interest rate hikes of 3 to 4 times in 2017, this year, 2018, and 2019. And as we mentioned off the top of the show, in Canada, there's no talk of any interest rate increases. As a result, the Canadian dollar will be in jeopardy for weakening without a doubt. That's why we're saying get into some U.S. assets that pay you well. Harold has those. He'll give you all the information if you call him, 1-800-432-1022. The other concern that we have, and we have these stories in our free weekly newsletter. You can get them from Harold. We send out our free weekly newsletter via email every week. Toronto area in a housing bubble, according to BMO Capital Markets. Housing prices in Toronto and surrounding cities are rising at a fiery rate not seen since the late 80s, according to the chief economist at BMO Capital Markets. Let's drop the pretense. Doug Porter wrote in a commentary, the Toronto market and the many cities surrounding are in a housing bubble. Everyone may have a slightly different definition of what a bubble is, but we can agree when it comes to prices, they are dangerously detached from economic reality, fundamentals, and are starting to rise strongly simply because people believe they will keep rising strongly, encouraging more buying. And obviously that is a huge concern. In Toronto, they're on fire. In Vancouver, they're actually getting things under control. People are moving to Seattle, the investors, to obviously look at investing there over Vancouver. If you want more information about the Canadian market, speak with Harold, 1-800-432-1022, the website, rarecoloreddiamonds.com. We'll come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on February 17th, and it's 2017. Our time is 9:05 Mountain. It's Family Day long weekend, pretty much across Canada, although BC had theirs last Monday. There are a few provinces that do not partake, but yes, Alberta, here we do, and we're thankful for that. People enjoying a long weekend. In the United States, it is President's Day, or as the current president might say, Big League Day. It's Big League Day, Big League. Connect with Harold Siegel at rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. The website, rarecoloreddiamonds.com. Our radio show runs on 6:30 CHED, Sunday afternoon at 3. Next Sunday, we are going to be on from 12:30 to 1:30. Oilers playing Nashville Predators at 3 o'clock, and we'll be on just prior to the face-off show. our featured diamond of the week, and we teased it off the top of today's show. From rarecoloreddiamonds.com, we have something that has the potential to astound the world. It is a .25 carat fancy intense green rough with the potential to be nearly flawless. Now, if you're wondering about this rough diamond, go take a look at Featured Diamond of the Week, rarecoloreddiamonds.com. We have a picture of it up there. And Harold is so excited about this diamond. He teased us on past shows about it. He mentioned it to me in past conversations, saying this diamond has the ability to be one of the world's finest diamonds when it's cut and polished, something you potentially could see in a museum, one of the rarest of the rare green diamonds on planet Earth, and it really will be up to the investor who takes it and does the cutting and polishing. And Harold, I'm very curious to see how this diamond turns out in the years ahead, but you're very, very excited, very bullish on this diamond.
Oh, you better believe it. First of all, if you want to see the diamonds up close, then go on to rarecoloreddiamonds.com, look for the featured diamond, and take a look at something that most people will never, ever see in their lifetime. So understand this. This is the way that a diamond comes out from the mine. It's obviously uncut, and it's in its rawest form. Now, what happens is that my partners, who are from Venezuela, fourth-generation miners and been in the diamond business, for over 100 years, my partner, Jose Amon, will literally sit in a tiny little room in Miami at Brinks, the security company, and examine diamonds for, at times, 12, 14 hours a day. So he picked this particular diamond. Now, I'm positive that people that don't know much about diamonds, and even people that do know about diamonds, when you look at this picture of a rough, uncut diamond that just came out of the mine, how in the world could you determine that that's going to be an intense green? The other thing is that you can also look at this, and with a green diamond, they actually cut from the inside out. So you could literally see that there's green in the center of the actual diamond, but the outsides of it are white. So the fact is that, we've had many, many diamonds. In actual fact, we have a 50-carat D-flawless white diamond rough. Okay, it's magnificent. It's 50 carats, but it's going to cut down to a 30-carat perfect white diamond. We're going to lose almost 50% of that diamond, but I think that when you look at this picture of this rough green, intense green, that you'll understand much more about what I'm talking about. They cut away certain parts of the diamond that just are not, distributing that type of color. And we have cutting facilities in Antwerp, Belgium, and in New York, and we have expert cutters that cut these diamonds. So this is going to turn out to be probably just over a carat. So we're going to lose most of that diamond, but we're going to end up with a fancy, intense green VVS1 or potentially flawless diamond, which will make that diamond worth 7 figures. That's how rare these diamonds are. And this is the business that we're in. As magnificent as that diamond is, we currently have a 19.5 carat rough green diamond. It's a diamond that we bought for $6 million, but it's a diamond that once it's cut and polished, this will happen years down the road, but it'll cut down to probably a 10-carat vivid green from a 19.5 carat rough, and that diamond will jump from $6 million to 30 to 40, maybe $50 million when that diamond is cut, finished, and sold to the end user. We allow our Canadian clients to partner with us in some of these deals. So if that would be interesting to you, you could certainly contact us, and we can certainly let you know how you could possibly get involved and be a partner in some of these unbelievable diamonds. We've actually purchased recently some of the most amazing rough uncut diamonds that we've ever seen. Some beautiful greens like this one and the 19.5 carat that we have. And by the way, all these deals that are done, they're all done in U.S. dollars. So the fact is that we're just killing it with these rough diamonds. They're doing tremendously well. Our clients are making a fortune, and they're making it all in U.S. dollars. So, again, it's just extremely exciting. We wanted to put up this diamond so people could understand much more about what we're talking about when we talk about rough diamonds and cutting them and polishing them, sending them to GIA to be graded, and how in the world you end up, from a 2.5 carat to a 1 carat, and most of it, again, is not usable. You're not going to say you're going to end up with little chips of greens. It doesn't happen. You're going to cut the diamond according to the way it's mapped out through GIA and the experts, and we're going to end up with one of the rarest green diamonds in the world. And you can imagine that last year in 2016, the Aurora Green sold. There was a 5 carat vivid green diamond that sold for $15 million. It was 5 carats. It sold for $3 million a carat. It sold for $15 million. Our 19.5 carat is going to cut down to a 10 carat vivid green diamond, which means it's double the size of the Aurora. And it's the same color and the same vivid. That diamond could literally sell for $4 to $5 million a carat. And it's going to cut down to a 10 carat from an almost 20 carat. We're going to lose half of that diamond, but the saturation of the color is going to be so extreme that it's just going to be one of the rarest diamonds ever reached, and that will be our diamond. And our clients, mostly our Canadian clients, are our partners in these diamonds. If that's of interest to you, these are the type of programs that I'm talking about. These are not stocks or paper assets or anything. These are real, hold in your hand, unbelievable diamonds that come from, deep within the earth, and it comes up through volcanic eruption, extreme heat, and everything like that. And this is what the result is. You get a magnificent diamond, and if you don't know what you're looking for, you're going to miss this. But my partners are experts at this. This is what they've done from their great-grandfather to the father to the and down to the sons, and then now the children are getting into the business. So it's just an unbelievable time, extremely exciting. These are the type of deals that we've been talking about with our clients. They're able to partner up with us and be in U.S. dollars, and again, we're very, very excited about this. By the way, I forgot to mention that Monday is President's Day, but on Sunday night, I will be at Trump National with my wife for dinner, and Mr. President, will be there. So we'll be in the same room having dinner with Donald Trump at his country club, where I played many, many times. But it's just ironic that it's President's Day weekend. He's going to be, staying at Mar-a-Lago, which was actually the Marjorie Post mansion back in the day, and Donald Trump bought it, redid it. It's right on the ocean. It's right across the street. It's the most beautiful complex you've ever seen in your life. That's his home in in Palm Beach, and he'll be there this weekend, and I'm actually having dinner. I don't think I'll be sitting anywhere close to him, but we'll be sitting in the same room with him, and it'll be a very exciting weekend.
Sounds very, very exciting. You never know what will happen when Donald Trump is around. I heard that he popped into a wedding. Here he is, President of the United States, at Mar-a-Lago. There was a wedding, and he popped in to wish the happy couple a very happy life. So you never know what could happen. Connect with Harold, 1-800-432-1022. The website, rarecoloreddiamonds.com, our featured diamond of the week. And this is something that is so unique, so rare. The potential really boggles the mind, and that's where you need to call Harold, speak with him, and if you're interested in maybe being a partner and an investor in this diamond, it's a 2.5 carat fancy intense green. It's a rough, potential to be nearly flawless. You can see it online at rarecoloreddiamonds.com, rarecoloreddiamonds.com, and on the last show, we touched on the Aurora Green Diamond, a 5-carat, rectangular-cut, fancy, vivid green diamond within a circular-cut pink diamond surround. It sold for $16.8 million at Christie's Hong Kong Magnificent Jewel Sale almost a year ago in May. And that was where Harold had been talking about green diamonds for quite some time. And then we had this auction result come through, and it proved to us that, yes, Harold was once again right, on the right track, this time with green diamonds. And green diamonds have an unbelievable potential. And when you're looking at it from the perspective of a rough, obviously, then it's really wide open. Harold, how would you decide what cut to make a diamond like that? Do they take a look at, obviously they want to bring out the color, so it's the strongest color. They want to bring out the best light and sparkle in it. And how long can that take to sort of figure out the logistics of it before you actually get down to the cut?
Depending on the diamond, like for example with the 19.5 karat green, that they could actually sit down and discuss that for months as to how to cut that diamond. So looking at the feature diamond, the 2.5 carat, that's more than likely, as you can see, you'll see that it's going to be a square or a radian cut. And it's possible that it could be an emerald cut. So if that diamond turned out to be a 1 carat, fancy, intense green, VVS1 or flawless, that diamond's a 7-figure diamond. So again, it's just so exciting to think that these diamonds come out of the ground. What makes a diamond green is uranium in the ground. It seeps into the ground and turns, the diamond actually green. So you could see that part of that diamond is still white, but you see the center of it is that intense green. And again, it takes a true expert to be able to figure this out. It's not something that I do. I wish I had that. Knowledge, but fortunately my partners have been doing this since they've been children. They've been brought up in that business, and it's really exciting to see how these diamonds actually take form after they're cut. And again, it's also very interesting to know that when a diamond comes out of the ground, what the cost of it is compared to what it's ultimately going to sell for when it's cut and polished. Now, don't forget, we're buying this diamond through the miner. So we paid $6 million for the 19.5 karat green. Ultimately, once, 3, 4, 5 years down the road, once everything's done, cut, been sold to the end person who's going to buy it, that diamond could be 30 to 50 million. That's the type of profit that is available in this type of part of the business, and that's why we're making it available for our Canadian clients to partner with us on some of these deals. So it's very, very exciting, Randy, to be able, number one, to hold these in our hand. Now, a lot of our clients from Canada come down to visit us in Florida. Our private showroom is in Palm Beach, where Trump lives, and our office is right on the ocean. So the fact is, almost every week we have Canadian clients leaving Alberta or Toronto, where it's very cold, and coming down to visit us in South Florida, where it's 85 degrees today. By coming to our private showroom, they get to see not only our amazing jewelry lines and all that, but they also get to see some of our rough uncut diamonds. In fact, a lot of our clients that come down and invest with us come down to see the exact diamond that they invested in. So it's very exciting. These opportunities are all available for our clients. Things are getting very, very dangerous in Canada. You got the C-15 bill. We understand why the Canadian government is not going to bail out their banks, because the fact is the banks could be in so much trouble because of this real estate market that we could see some of the banks in Canada crumble. And because these banks are owned by the government is not going to bail them out. You are. That means that if you have more than $100,000 sitting in a bank account and that bank gets in trouble, they could take everything over $100,000. The only reason they're not taking the other $100,000 is because you have insurance through the CDIC. But the fact is that the banks in Canada, I'm seeing a problem. I'm seeing that the real estate markets could plummet at a time when the oil market has not been good, the overall economy is bad, and the Canadian dollar is weakening. You're going to see and wake up one day and see this whole meltdown happen. We want to make certain that you're not caught up in that. So please, I don't care if you're a tiny investor or whatever, give me a call and I'll sit down over the phone and explain to you what your options are, go over what your investment history is, and see if I can help you. And if there's any way that I can help you, it's going to be done. So again, we've got some phenomenal programs. all based in U.S. dollars. We need to get out of Canadian. We need to bite the bullet right now, pay the exchange rate, because the exchange rate is going to be way more substantial as the U.S. dollar gets to 115 to 120 and the Canadian dollar drops down to 60. There will be a 50% difference. We want to make that money. Again, it's a long weekend this weekend, President's Day. And it's Canada's Day and Family Day up in Canada, so we will be closed on Monday. But please, we still monitor all of our calls, and we will definitely get back to everybody that calls for an appointment with me. And again, it doesn't matter what level you are investment-wise. If there's any way that I can help you, I'm going to do that. So again, at this point, Randy, everything is looking pretty exciting when you think about it, that the U.S. dollar is going to strengthen much more. It's going to slightly push the gold market down so we can get a slightly better price, but I do not expect that the gold market is going to crumble. I think that there's enough concerns around the world that the gold market is definitely going to hang in there, and we do need to own gold if we're going to hedge against the potential of things happening with other countries like North Korea and situations like that. So again, Randy, at this point, I think we're in great shape. I think moving forward into 2017, our clients are going to make an awful lot of money, and we're going to make it in U.S. dollars. So that's the way I'm seeing things at this particular point.
And Harold brought up a very good point, and that is here in Canada, we have to be concerned about the housing market. And as I touched on in the first half of the show, Douglas Porter, who is with the Bank of Montreal, came out and said the Toronto area is in a housing bubble. And at some point, that bubble will be obviously broken. And we don't know when, we don't know why, we don't know how it will happen. But we know for a fact that Toronto is not growing fast enough to justify its bubbly housing prices. Vancouver put the curbs on. Then you saw investors from Asia move to Seattle, go into that market. They also are remaining to invest in the Toronto area. One of the things that we have to worry about for Vancouver, and Bloomberg had a beautiful article explaining the situation there. Vancouver's empty mansions highlight middle-class housing woes. Vancouver's multi-million-dollar homes are increasingly out of reach for Vancouverites, and nothing speaks to the Canadian city's affordability crisis more than empty homes. Vacant or temporarily occupied dwellings have more than doubled since 2001 to 66,719. Last year, as neighborhoods are hollowing out, said Andy Yan, the director of Simon Fraser University's City Program, who analyzes census data for Metro Vancouver, released on Wednesday. And observers worried that the trend will undermine Canada's fastest-growing regional economy. But there you have it. People who have invested in homes from Asia in Vancouver, just having them sit empty. And yet there are people who cannot afford to buy a home because they don't have the money. It is a real unfortunate situation. That's why the BC government and the Canadian government have tried to help things out, putting the 15% tax on for foreign purchasers, as well the 1% housing tax if your house is empty. But still, at some point, when you have all those empty homes and somebody wants to sell and they can't sell because they're not getting the prices they want, it could really potentially drive down the price in a major, major way. And as I said, Harold is there to step you through these financial markets in Canada and the United States, around the world, geopolitical concerns. He does the show, and he wants to connect with you. If you're out there listening, want to pick up the phone and speak with Harold, he'll be happy to talk to you come Tuesday. 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com, rarecoloreddiamonds.com, and find out more about our featured diamond. It's a 2.5 carat fancy intense green with potential to be nearly flawless. This is a rough diamond. See it at rarecoloreddiamonds.com, and that is the beauty of investing in diamonds. You have an investment millions of years in the making. Rare colored diamonds really are nature's art. It's private, portable, stable wealth. And speak with Harold today about investing in diamonds, starting your own diamond portfolio, or getting involved in some of the different programs he has today. If you're sitting in a GIC getting 0.5% or 1%, you're just not going to be able to retire. But there are programs where you can make money immediately, and Harold has them for every different, obviously, risk profile. Speak with him and find out more. 1-800-432-1022. RareColoredDiamonds.com is the website. And one of the things that I really love about diamonds, it's concentrated form of wealth. It's a storehouse of value. It's not a piece of paper, meaning a stock or a bond certificate. It's not some crazy hedge fund. And it's portable private wealth. And the truth is, so many people are moving into collectible cars and art. And that art market is doing very well. Collectible cars doing well. There's the watch market. Watches are very, very popular. Handbags. All sorts of hard assets are becoming popular. But the Wall Street Journal had an article, I guess it was about 3 weeks ago, we had in our free weekly newsletter, where they're saying people are moving into rare-colored diamonds. They see the potential of this rare-colored diamond market, and which was the purveyance of the very, very wealthy, has average everyday investors looking at this market for an alternative way to make money than the traditional stock, bond, and real estate. And Harold, we have about 3 minutes left in our segment here.
You bet. Again, that's why we're in the alternative asset business. 90% of people that trade stocks lose. 90% of people that trade commodities lose. So the fact is that if the odds are that poor in our favor, why in the world would we want to put our money that way? There's other areas that we can make a lot more money without anywhere near the risk you have of trading in a market where 90% of the people lose. Nobody's going to do well in retirement savings plans. They just don't do well. You know, the fact is that you need to be in alternative assets, and we can certainly help you in that area, and we're looking forward to do so.
One of the things I found very frightening this week, we had talked in the past about the Italian banks, and Italian banks are in very, very severe trouble with bad loans. And there was a story that I came across this week, and there was a woman who is a regulator of the banks in Russia. And she went to Vladimir Putin and said, we've got a problem here. It's very, very serious, and I need your support to deal with it. If we do not deal with the problem, we are going to have a serious issue on our hands. Now, this is a quote from the story. You can see it in our free weekly newsletter. In Russia, practically all the privately owned banks have time bombs inside them, and it's not clear how to save them. Think about that. We know there's trouble in Italy with banks. Now they're talking about Russia. Privately owned banks, time bombs inside them, not clear how to save them. You can see that article in our free weekly newsletter. That's why we're advocating, obviously, an insurance policy in your portfolio, and we believe that is hard assets, holding hard assets at all times. And Harold, we have about a minute left. People have to understand, yes, the financial crisis is many years behind us, about 7-8 years behind us, but in some ways, the residue is still there, and the problems have not been fixed. And the truth of the matter is, I think we need to learn from the past so history does not repeat in a way that we lose a lot of money again. And that's my concern about another financial crisis.
Well, again, things are so risky, and we're saying at this point here just to remain very conservative. Don't take unnecessary risks. Don't speculate in markets that you're uncomfortable with and don't know anything about. And again, if you want to know about the programs that we offer that are all in U.S. dollars and doing extremely well, give us a call and we'll spend the time with you to explain everything and see if we can possibly help you.
Harold, have a great Family Day and President's Day in the United States.
Well, thank you very much, and I wish all the same. I wish everybody a wonderful long weekend and a very profitable day.
Speak with Harold personally and privately, 1-800-432-1022, 1-800-432-1022, the website, rarecoloreddiamonds.com, and definitely, whatever you do, take the time this weekend and go to rarecoloreddiamonds.com and take a look at that rough green diamond that we have, the featured diamond. You will be blown away at what you see. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next weekend.